Good morning, everyone, and welcome to the European crossover webinar. And we've seen things kind of quiet down a bit from all the movement from yesterday. Obviously, one of the big drivers yesterday was obviously the S&Ps, and we saw how that market had continued to go on and slide. And we were looking for later in the day for a support level at 28.17. The market got there, and then we got a bit of a bounce, not a huge bounce, but a decent bounce. I mean, we rallied, well, I guess it was a decent bounce, I guess about 30 handles. But we turned around and gave it up on the currency manipulation headline, and obviously that drove us lower. With that, we got the euro moving higher, much higher at the time, and we'd actually made it up in here into this 1247. I was discussing with a couple of folks last evening, or an Asian session. I know it seems like all the days blend together, but right here at the 1247 actually came up a shy, and then it made one more push into it, and then we got above it, and then we just kind of struggled, and we stayed there. And it wasn't like as if the market reacted. It just kind of sat there, and it would kind of drip a little bit and just sit there and sit there. And so what we saw through the rest of the morning, if you look on the 15-minute, we were just seeing a little bit dip, a little bit further dip, a little bit further dip. One of the things I did go on and draw was this trend line here. And it looks like all we did was we came down here to tag the same area with this trend line. And for there, we've picked up a little bit here with the euro. But as I said, I think the market's trying to figure out this whole currency manipulation, how it's moved things around. Let me move this here. But technically speaking, you'd just be buying the euro on a dip at this point. Basically, no questions asked. Just going with the technicals at this point. And I saw that. I mean, I found I had to go to sleep. I got to get some sleep. But I saw with the yen, I'd actually shorted the yen when it initially rallied. This was actually at 640. That's it. It was about to hit at 640. I caught it a little bit lower. As it started to back down, and then I think we went down. I mentioned in there, watch for 617, and I think we got it down to 610. Let me take a look here, and look. And since then, we saw a pretty big small rebound here. Hang on one moment. So you can see here, this is where they went up for the 23%. 23% was 642. So they made a run up here. I'm looking at in the 15-minute chart. And we paired back, and I saw 617 is a good level. I said, watch out for 617. I think we came down to, what, 610? Oh, no, we came down to 608. And look at this thing. This thing marched on higher. We made a run up here, actually all the way up to the 38%. I mean, we got beyond that, but I mean, we made it up to 38% and exceeded that, and it looks like we ran out of gas around, what, 708, and then since we paired back. So we're seeing good volatility. I kind of ended up focusing a little bit more on the yen because, once again, the euro, even though we saw a good move, even when it got there at that 1247, it basically just dripped a little bit lower. It wasn't really making any movement, but you're seeing good two-way action here with the euro. Not the euro, I mean talking about the dollar yen. That's where my focus was. I had done a little bit of scalping late yesterday afternoon with the peso when I thought that the SPUs would go and hold or make a stand here at 28.17 because it saw it as a good value area. And the SPUs, we saw a nice rally or a decent rally off of that. We got down to 28. I had 28.17, the lowest 28.17 and 3/4. At least we had it on the cash. And then we saw a rally and subsequently saw the peso pull back, but not as much as you would have thought of. And then I got out, but of course, wasn't going to hold this thing, beyond the S&P's close. So I got out, but I mean, I made a little bit, not a whole lot, but that was pretty much it. And then, of course, with the cat. But like I said, the thing we talked about yesterday on the daily wrap up, our daily roundup, was the thought that this market could go higher. The euro, and we talked about how the market there had not been any let up, and I thought we'd go higher. And I was looking for at least that move to 1218, maybe even higher than that. Certainly, the currency manipulation news. I mean, there's always a headline. Not saying that it couldn't. I mean, we'd already come up into the, was it 1209 or something, kind of pared back a little bit, but that pushed us higher, and we drove up all the way eventually to this 1247 that I'm referencing here. You can see it more clearly on the 2-hour chart here. I posted that chart in the Asian session before it got there. It was actually making that move, and then it came a little bit short, and then it finally got up there and got above it, and then it just kind of sat there. It was quiet, and the real movement that we were seeing here was in the dollar yen. But you can see here, I had this trend line here, and all we've done is come right to this trend line, technical standpoint, and just from there we picked ourselves up, moved up to the high 12 teens. We're kind of backing off a little bit here. We did get some German factory orders come in a little bit stronger than previous. And we can also take a look at the cross rates. Bear with me. So that euro also, we had 65, and I didn't think it would push too much higher, but obviously we saw that big run up here in the euro, and that really pushed it. I mean, we were already I didn't think we'd get too much further beyond 65, but we made it around 65.50-ish. But that currency news actually, where the euro was on the bid, really pushed us up even higher. You can see this here, even with the euro kiwi. ASEAN still staying relatively low. I think I saw something where in the chat that Amanda was stating there was a big option expiration on the ASEAN. I didn't see a figure, but I did see where in the Asian session, Forex News posted their options. They weren't all that. I mean, I think there was like a larger decent. I think there was one like around 800 million. Maybe a little bit more for the euro, but it was like at 111, so it wasn't going to make any real difference, and everything else was more minuscule. But they didn't post, and I haven't seen anything on the ASEAN here, although I believe Amanda mentioned it. I can see here in the sterling versus the Aussie, we'd had decent run, but we've seen since quieted down from this area, from this bounce back, and obviously the euro yen, pretty nice rally back. Look, from making it all the way down here. Obviously, like I said, the whole yen, the whole euro thing, certainly driving things, and we'll get back to that. Let's go on and move back into the main screen. It ended up, I mean, obviously we got one thing leads to another. We got the China with the yuan, and then we got the currency manipulation. But in the daily roundup, that was my take, was just that this market could move higher. Obviously, the market found its own reason why it wanted to move higher, but it definitely moved higher. If you went with the levels, I guess that 1247 wasn't going to be bad, but it certainly, the door was open. The whole thought, and FX Macro brought this up, which is, and Blake has mentioned it a couple of times over the last 2 weeks or so, is that the euro's turned into a funding currency. So you can see these moves. I was going to say unorthodox, but that's not really the right phrase I'm looking for. But you can see, based on situations like that, where you would see exaggerated moves. That's what I meant to say. You can see an exaggerated move. The move to 1247 isn't what I'd refer to as an exaggerated move. It certainly was. It certainly pushed the limits a little bit. But then again, if you look at as to the U.S., the whole China yuan, and then then U.S., labeling them a currency manipulator, was able to drive this. But once what I was seeing here is, and we'll take a look at this before we jump into the news. Now, this would have been a more exaggerated move, that I believe. Okay, if you look back here, okay, there's the 38% of this move, which would be 1029 to 1816. And you can see this would be confluence here with the 1326 here. So that, now that to me, and let's go and move this up a little bit higher. Now that to me, or at least even to this 1285 would have been huge if we got there. So we came up shy here. Now, if you don't see it as clear on the daily chart, obviously you see it more pronounced on the 2-hour chart. We made that run up here to the 1247, ran out of gas here. Now, had we seen this move, then I think right here, if we could have stretched it up here to 1285, or even, like I said, a more exaggerated move right here to 1326, you can see now that's some good volume there, confluencing then with 1330, which would be the 38% of this move that we've talked about from 1029 to 1816. So if you think about it, considering that the market already moved up, obviously that was on the yuan news, and then with the currency manipulator, we could have pushed a whole lot further. At the very least, I think that would have been, let's say, up to 1285, 1290, and then run out of gas. Then I'd see something right there. Or, like I said, a more pronounced move to 1326, and then also 1330 to 38%. So we pushed the limits here. I mean, it was good to say, I think the daily roundup, my caution was, hey, if you're short or you're trying to short it, wait. There's still, this market looks like it really wants to push higher. We're seeing something. I think the market I kept saying it's trying to assess, or it's digesting to assess. And certainly we saw that move higher, obviously prompted with the currency manipulator news for China by the U.S. But it wasn't an exaggerated move. I mean, we've pared back here, but from a technical standpoint, you have to be long the euro. I mean, you have to be binding on dips at this point here, and until we see us fade back from this trend line. So usually in a move like that, sometimes you miss, and I was telling people, or stressing, don't feel you have to be a hero. Usually when you see an event like this, let the market take a couple of days to digest, to figure out what it wants to do. And that's why stress was yesterday. I thought that the market, it was acting like as if it was trying to figure out what to do with, I kept saying it looks like the market has a new dynamic, and it's trying to figure out what it wants to do, because when we were moving up higher, we weren't coming up in chunks where you would say, oh yeah, you can see them stopping out people. At the same token, it wasn't where the market was, you're thinking, okay, this market wants to move higher. They're just squeezing the shorts little by little. It's just kind of like the market was quiet. It was just kind of edge higher, edge higher. Of course, later in the day, then you knew, as I mentioned, there's no reason to try and step in and short it at that point, because you knew anyone that was short sub 1150 with weak hands would be forced to go and cover. And my thoughts were, I was saying, well, watch Asia, because you can see an even further move. Well, I wasn't sure how much of a further move. I thought like around 1219. Now Amanda pointed out yesterday, hey, 1219, I think that's a 50%. I thought we might even push around 1225 maybe. But obviously the manipulator news is which gave us that move higher. But the market was primed for a move higher. And I thought, okay, we can potentially stretch up to maybe 12 and a quarter, maybe even the upper 1220s. And then maybe then the market will start to fizzle. The currency manipulator news threw everything on its head, and then we had to see how far this thing could run. It looked like it could run even further beyond this 1247. But once we got there, we kind of just started to drip, kind of turned my attention toward the dollar yen. And you can see some pretty good movement and some scalping options there. So that takes us to where we are, although we did come down here to 97.21. Key area here for the cash dollar index. Yesterday I was looking for the 97.43. I thought that there was 97.43 I was saying, or 45, but maybe it was 43. I was saying, hey, look, that's it. That's a stretch move, which we did get down there. But of course, like I said, the manipulator news drove us much lower. So that being said, let's just go and take a look at the news. Obviously, the big movement was here in these equities, and a few of y'all were in that, and it's kind of frustrating for me in the sense that later on, I was looking for 2863, and we did see the market bottom out at 2860, and then we saw a 13-handle rally, or from the 2863, I was looking at a 10-handle rally, but at late in the day, I thought this 2817 was going to be a good level. I posted that before we got there. And I think at the time the market was like a 2827 or 2826. So eventually we got there, and I ended up taking a short in the dollar peso. Now, like I said, I made a few dollars. I'm not going to complain, but holy smokes, it's been better if I'd just gone along the S&Ps, because like I said, then we saw a 30-handle rally off of that, and the SPOOs, I would have expected this thing to have fallen much further. So that part was a little bit frustrating. But anyway, let's go and move on to the news. So the morning bid, no deal talk grows after latest UK-EU encounter. Whatever happened in the encounter last week between UK PM Boris Johnson, chief European envoy, and EU officials, it was no meeting of minds. The Guardian reports that the Brussels diplomats briefed after the meeting with David Frost said it was clear Johnson has no intention of renegotiating the withdrawal agreement, and that a no-deal Brexit is his central scenario. Bear in mind, there was only a few weeks ago that Johnson described the chances of a no deal as 1,000,000 to 1, and that official UK government line remains to want to negotiate in good faith. Since then, the rhetorical tactic has clearly shifted to a thinking of the prospects of the no deal, and B, blaming such of any outcome on EU intransigence. Boy, sounds like somebody I know on this side of the pond. Forecasters agree that the worst hit countries in the event of a no deal would be Britain, followed by Ireland. Glimpse of that came through in today's PM Services readout for Ireland, which showed the first fall in new exports since 2016. While the headline figure remains at 55, still well above the 50 mark that separates growth from contraction, the sub-index for new export orders fell to 49.4 from 53.4, the first shrinkage since November 2016. The authors cited a decrease in orders from the United Kingdom owing to Britain's uncertainty as a factor. General industrial orders for June this morning are a double-edged sword. On the one hand, there'll be relief that they may rise and above forecast 2.5%, which they did. I mean, we did see a nice rally. On the other hand, the figure is buoyed mainly by orders from non-Eurozone countries, which, while demand from the single currency zone dropped for the third month in a row. That suggests Germany's main problem is not a global slowdown, but weakness closer to home, something that the ECB will no doubt factor in its next policy moves. Tit for tat indeed. The escalation of the U.S.-China trade war has been exponential since President Trump's threat late last week to impose 10% tariffs on all remaining Chinese imports from next month. Beijing's response on Monday was to let the yuan slide to the $7 per dollar level, to its lowest in 11 years. The U.S. Treasury then responded late Monday by formally designating China as a currency manipulator. And adding it would seek arbitration at the IMF over unfair trade practices. The inevitable extension of this exchange is that Trump also makes good on his threat that 10% tariffs rise to 25%, and markets are inevitably spooked, with Wall Street and global equity indices having the worst day of the year on Monday, and the losses have deepened early Tuesday as volatility gauges surge. The U.S. Treasury move on currency manipulation is in large part just symbolic. Technically gives cover for retaliating on trade when in practice has already been jacking up tariffs on China for the past year. What's more, critics say the criticism of currency manipulator for trade advantage rings a bit hollow, as any significant intervention conducted by the Chinese over the past 3 years has been to hold the yuan up rather than artificially weakening it. And China setting its yuan target at a firmer rate level than 7 for the dollar on Tuesday also indicates Beijing's move to allow it to slide on Monday was more of a shot across the bows than the beginning of some protracted devaluation. Nevertheless, the whole episode is showing investors just how quickly these trade routes can get out of hand and how much damage they can do to an already fragile economy. And there's a fear that the weaponizing long dormant major exchange rate trade rate for trade purposes risk uncorking global markets, volatility, and edgy time. The dash to traditional safe assets has been rapid. The S&P had its worst day, 25% so far. And the index is now down more than 6% from last month's record high. The surge in the VIX gaze to more than 24% brought its highest since January the 4th. The selling continued through Asian markets, with Shanghai stocks down almost 2% to their lowest since February. Compounding trade fears have been a series of worrying geopolitical developments, with increasing violent street protests in Hong Kong, drawing angry insistence about Chinese unity from Beijing. India dramatically removing Kashmir's special status on Monday, and North Korea firing another 2 short-range missiles into the Sea of Japan on Tuesday. The bid to safety from trade, recession, and political fears has seen a huge additional bid for top-rated government bonds, with 10-year U.S. Treasury yields falling to as low as 1.677. Wow, the lowest since before Trump came to power in 2016. The recession flag in the U.S. Treasury yield continued to wave furiously as the curve between 3 and 10 inverted to its most negative since 2007 at more than 30 basis points, despite the Fed's easing last week and rising expectations of a cut of up to 50 basis points at next month's meeting. The European sovereign debt yields continue to sink sub-zero, with Irish government bond the latest to go negative on Monday, along with 30-year Dutch government debt. In currency markets, the offshore yuan stabilized after hitting a new low of 7.1397 per dollar earlier and came back to about 7.06. Emerging market currency index fell to its lowest level, and the dollars index firmed after touching a 2-week low and talk and speculation about China shifting bond investments to Europe from the United States. And if that would be the case, then once again, you would see that demand for the euro, which is once again what's also helped prompt the euro. Although once again, I don't think that the euro rallied as much as it could have. Under the circumstances, it could have been much higher. I think that we should have at least challenged the 1285. So that's what I'm saying. The move hasn't been as really that extreme, considering we were already building up pretty good to it in the States. Brexit fears saw the euro sterling at a new 24-month high, and the yuan pulls off the lows. Monday, China let the onshore yuan break through the 7 per dollar for the first time since the global financial crisis. Treasury Secretary Mnuchin said in a statement on Monday the government had determined China is manipulating its currency and that Washington would engage with the IMF to eliminate unfair competition from Beijing. Yuan's sudden drop through the 7 mark came after President Trump announced that he would impose 10% tariffs on $300 billion of Chinese imports. The recovery in yuan and the move in the yen is triggered by the fixing, which eased some concerns about competitive currency devaluation, said Masafumi Yamamoto. China is not really trying to dramatically weaken its currency. However, nothing has been resolved in the trade war. Elsewhere, the Aussie rose to 67.78. The Aussie held on to gains after the RBA left its benchmark interest rate at a record low of 1%. The New Zealand Kiwi jumped 0.5% to 65.62 after New Zealand's jobless rate fell to an 11-year low, but the Kiwi later raced those gains to trade flat on the day. The RBNZ is expected to cut interest rates to a record low of 1.25 on Wednesday, but strong employment data suggests the economic situation is not as bad as some had speculated. Just bear with me. We'll get started with the bias chart. So after putting in this hammer bottom last week, I mean, boy, the time goes flies by now with these events. But we saw a pretty good rally back up here, and I was looking on the longer term aspect, where we could potentially go to, and here's that 1326 with the 38%. The market certainly has had this big one here, but when you look on a bigger scale, where could we go to? That's why we'll have my focus on potentially we could make it up to the 1326. But the market, as I said, considering the news with not only the one, but then the U.S. labeling China manipulator, the move could have been far more exaggerated. And I think we could have easily challenged and maybe taken on 1285. Now, this would have been more, trying to think of the right thing, but trying to say, but this would have been caught my attention more had we taken on 1285. Let's say we'd got up to 1297 or 1302, only to slide back. Now, that would have really been something. What we've done here, if you look on the 2-hour chart, we've broken out the trend line, and all we've done is revisit the trend line. Let's go back here. There we go, right here on this pullback. And they'll get down to what was, it looks like about 1191 and pop back up about 30 pips. Even this move here, if you think about it, with the exception of the dollar yen, which we've seen some good movement there, as the S&Ps have come back off of those lows, it hasn't been that, other than paring back, and it's pretty much been a drip until we got here, and then we took a quick drop. It's been relatively restrained here in these movements here. But the support right now at this point, we'd be looking at 1186. 1186. And for resistance, for right now, we're going to have to go with this 1247, which we had before in Asia, and we'd marked it off. That'll be resistance 1247. We have broken above this trend line, so for now we'll have to go and label the euro as bullish. Until proven otherwise. And we'll go and move into the cable. Well, the cable continues to meander at these lows. We've come off. I mean, if you look at it from a daily, it looks like it hasn't moved anything. When we move into the 2-hour chart, And with the dollar weakening, I think we have to give it, just move it. It's not a whole lot, but moving it up just right there, which isn't saying a lot, but it's going to be 21.18 for support. And you would think that they would see a bigger move with the dollar weakening, and we're just simply not getting it. But right here is what will come here across our resistance, which is going to be 22.20. And only because we're seeing some buying right there. So we're going to go with that 22.22. Obviously still woefully bearish. And let's go move into the Aussie dollar. Well, the RBA held rates, so we saw a little bit of a move higher here. Nothing of any real substance if you think about it. I mean, still keeping it relatively low. We'll need to go and move into the 2-hour chart to see if we can get some. You can see it's clearly in a sell mode. So for now, the support level right now is going to be 67.62 in the Aussie dollar. We just about nicked it right up here. There's some good volume coming in here. I don't expect the market to move a whole lot higher, but right, go right there. It's going to be 68.15. And let's go move into the Kiwi. Well, this thing's just taken an immense beating. It'll be interesting to see this because they are expected to go in and cut rates down to 1.25. We'll just go with this in light of that coming up. So it's going to be 64.86. Let's go 64.86. And we'll go with 65.73 for resistance today. Well, we got 72, so there we go. And let's go move into the dollar CAD. Well, the dollar CAD's marking time for now. When we make up to this 32.36, we kind of paired back and we jumped back above it. Then we slid back down and came with this medium-legged doji, which generally with the medium-legged doji is going to imply that the market's kind of run out of gas. And then you look at what the prevailing trend is, which has been up, and then we end up pairing back. Well, we're kind of sliding back a little bit, not a whole lot. But obviously the dollar remains under some pressure. This comes up just like as if almost like a little bit long for a graveyard doji, but certainly have that push here and have the door open for low. And I think that lower is what we can slide to. So we're going to be looking for a move down here to 31.62 is our bias chart support. And on the upside, let's take a look at that. Go right there with 32.28 for the bias chart resistance. And let's go into the dollar peso. So dollar peso, we start out the week and we're talking about this, formidable pivot to 1923-6 and how the market has not been able to get past that. And we finally did. And it opened up the door. What was our Asian analysis? We were looking for 1956, immediately 1943. Well, we got up to 60 and we paired back. Yesterday, as the S&Ps were still moving lower, we were starting to see that divergence with the peso. And that prompted me when we moved down to that my area that I was the secondary level of looking at, which was 2817. I thought we could get a rally in the S&Ps, which we did get a 30 handle rally or 32 handle rally. I thought we could have even gone further. And so I got short the dollar peso. I did make money, but I was really disappointed. I thought we would have gotten a far better reaction to when the S&Ps were moving higher. So it was disappointing. But once we got the whole China being labeled as a currency manipulator, that jumped the market up here, and we came up to this level here, which is 1972. Now we got a little bit higher, but there's your resistance. I mean, the market since paired back as the S&Ps have continued to go and recover. So looking out, we'll have to go into the 2-hour chart. Well, we've seen a very nice recovery here in the S&Ps. Look at that. And you can see here, even though it's on a 2-hour chart, a nice, well, it's not much of a medium-legged doji because the wick isn't that long, but you can see here as the market looks a little bit tired and then we start to pair back, we'll continue to pair back. Looking on the way back, for starters, is going to be right there, 1947, 1947.6. We could see an even bigger move, but we'll just go with the technicals here. It still isn't react as much as you think it would, considering how far the S&Ps have come off the lows. Resistance, 1959.4, right there. There's actually right here is right 1960, but yeah, I guess we'll have to stay with that 1960 on the upside. Let's move on now to the dollar yen. We did go and take a dip towards this 550, and the market, even when the S&Ps were working lower in the U.S. session towards the end of the day, we were still holding around the 106. We finally broke lower on the manipulator, but if you think about it, that was a good turnaround because falling only 50 pips wasn't even that much. And so henceforth, we saw a big rebound. If you talk about, look at about 150 pip rebound, only to pare back a little bit here. So we'll move into the dollar yen on a 2-hour chart. So for right now, resistance is there at 686. Support. $6.11. Then we'll move into the cash stall index. Well, we did find the support down here at 97.21. And that's just going to be our support there, 97.21. Because the technical level, I mean, I like that 97.43. Obviously, the currency manipulators drove it down. And that's you'd be looking at the risk level. Now, we may hang around here today, but maybe over the course of the next couple of days, we may ultimately end up challenging 21. We'll find out whether it holds or not. But and that 68 is holding up very well for now. Let's go with the mark to 97.21. We'll go with 97.79 for resistance. And let's go move into the cross rates. So we see a pretty good rebound here from the Kiwi yen, and we'll take a look on the 2-hour chart. Support's going to be right there, 69.28. And right there is going to be, let's go right there, 69.94. Obviously, the euro yen did hold the 1770. We saw quite the remarkable rebound. Let's go on and bear with me. Let's go move into the end of the 2-hour chart. Support for right now is going to be 1894. And resistance is fairly clear, 1950. Into euro on. This had quite the run here, but there's resistance right there. 65.41. 65.41 on the euro on. We can still pare back a bit here, but we're going to go right there with 64.41. Actually, 64.42. Into the euro QE. Quite clear here. You can see that 71 right there, 71.51. Probably even make the case for a little bit tighter than that here. We'll go with 71.51 in light of the RBNZ news too. 71.51. Downside, it's right there, 70.66. And let's go and move into the ASEAN. Right there at 71.85. And resistance is 72.55. And quickly move into the guppy and wrap up the show. Support comes in right there at 129.09. And resistance coming in right there at 30.32. And lastly, the sterling node. At 79.66. It's going to be 78.83 on the support. And that'll be the bias chart for today. I'll go and get that posted. We'll see you later on in the chat room. And thanks for joining us here on the bias